Now, as dividend growth investors, one of our main goals, at least long term, is to build out portfolios that earn enough dividend income on a quarterly or maybe monthly basis to cover our bills and then some. Now, this is because obviously at that point you would be financially free and you would more or less have the option to continue to work or just use your dividends to pay for your life. But with dividend investing, a lot of times we've learned that there's no shortcuts and that investing into some higher yielding options, although the fact that they could be offering massive dividends, the risk is not necessarily worth the reward. But in this video specifically, we're going to be going over multiple different higher yielding ETFs that could potentially get any everyday dividend investor to the $3,000 per month, all along while without sacrificing safety of their portfolio. So if you would consider yourself a dividend investor looking to retire off dividends, and especially if you want to do it quickly, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So before we go over some of the methods, some of these higher yielding ETFs that I think could potentially be good options for a dividend, more income focused investor to look into if they're looking to retire off dividends and do it fast, I first want to make it very clear that I think that a well-balanced, diversified portfolio like mine right here on the screen is a potential great option for long-term investors, because a portfolio like this is not only made up of income-focused, more dividend-focused investments, things like BDJ or even Devo, but also I own things like 1,000 shares of Apple, I own JP Morgan, I own a ton of SEHD, which also have the potential to grow over time. But now to get into some of these higher-yielding ETFs that are also relatively safe that an investor could use to potentially retire off dividend income and even potentially do it early. The first ETF that I think is super high quality that I own a ton of is the JP Morgan Nasdaq Equity Premium Income ETF, or JEPQ. Now, JEPQ utilizes a cover call strategy, buys the Nasdaq 100 and writes cover calls on it. And by doing so, it not only has the potential to grow over time, at least a little bit, but also because of that cover call overlay and the strategy involved is able to yield around 9% trailing 12 months, which is massive. Now, I would consider a relatively higher yielding safe name because the way it's performed over time, even though this ETF has only been around since 2022, we have a decent track record to look at and see that this ETF has done pretty well. Now, I think it's also safe to mention that in the higher yielding world, whether you're talking stocks or ETFs, there's going to be a spectrum of quality. There's going to be certain names that I would never touch with a 10-foot pole, and names like JEPQ that even though yields around 9%, this ETF allows me to sleep pretty well at night. Now, because JEPQ specifically pays on a monthly frequency as far as dividends go, and just going off of last month's dividend announced 43 cents per share, an investor in theory would need to have around 6,976 shares of JEPQ in order to retire completely off the dividends, or have around $360,000 invested into it. Now, before you say that's a ton of money and that there's no way that you can invest this much money into an ETF like this, you have to keep in mind that with annual contributions and reinvesting the dividends that you are paid from JEPQ, your portfolio can grow a lot quicker than you would think. Not to mention, if you were trying to retire early buying something like SPYI or even something like ticker symbol VIG, just by retiring off the dividend income alone, it's going to take you about 3 or 4 times as long. But don't worry, we also have a higher yielding option that I also think is considerably safe. I'm talking about SPYI, or the NEOS S&P 500 High Income ETF. So first, all right here on the NEOS website, it says looking for high monthly income. And I would say yes, who isn't? The NEOS S&P 500 High Income ETF, or ticker symbol SPYI, aims to offer high monthly income in a tax-efficient manner with the potential for upside capture in rising markets. Now, some of the objectives are to seek high monthly income in a tax-efficient manner, and also on top of that have upside potential when the market turns bullish. Now, this is also kind of cool. It shows that since inception, the NEOS S&P 500 Income ETF, or SPYI, has outperformed some of the largest income-focused ETF peers, and some of these are very popular. And just for full transparency, I personally hold everything in here. So you can see that the blue is total returns. This is dividends plus price return included. SPYI almost has a 20% total return, where XYLD has over 12%, JEPI has 16%, Devo has almost 16%, and SPYI, of course, the king of all ETFs, has almost 30%. Now, if you've been watching me for a while, you know I've talked about SPYI in the past, and I have had a few shares of SPYI across my portfolios. for several months now, but it wasn't until recently I dug a little bit deeper into this ETF and really realized how this ETF works and why I personally need to add more shares of SPYI into my portfolio. But digging a little bit deeper into this ETF, some of the negatives, I guess you could say, is the expense ratio is pretty pricey. At 0.68%, this ETF, because it's management heavy, is going to cost you a little bit more to hold on to. But with the promising total return so far, at least, the expense ratio doesn't bother me all that much. Now, one of the other reasons I wasn't exactly sure about how much SPYI I wanted to add to my portfolio long term is because a lot of these higher yielding ETFs, although many times offer nice juicy dividends, they seem to decay in price over time, meaning that, for example, if you buy a share for $50, even if it pays a 10, 11, 12% dividend yield, if a year later the ETF is trading at $40 per share, you didn't really gain anything. If anything, you lost money. But so far, since around 2022 at least, so keep in mind this ETF still is relatively new, the ETF is up 3.33%, which I hear you, it's not all that much, but it is in the green, and we haven't seen any major decay, at least as of so far. Now, to dig a little bit deeper into how the SPYI strategy works, it says right here, number one, the fund seeks to distribute high monthly income generated from investing in the constituents of the S&P 500 index and implementing a data-driven cover call option strategy. So very similar to other cover call funds out there. In this case, we're talking about the constituents of the S&P 500 index, which of course are great holdings. I don't think any of us would really have any problem with having more exposure to the S&P 500. And then on top of that, the fund manager uses cover calls to, of course, generate premium, which is paid out in the form of dividends. But that's not all this ETF offers. Listen closely. It says actively managed by NEOS, the fund takes advantage of tax loss harvesting opportunities, in addition to utilizing SPX index options, classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. And at least so far, SPYI has been paying around a 49-cent dividend every single month, which means an investor would in theory only need to purchase around 6,122 shares of SPYI in order to retire off that dividend and receive around $3,000 on a monthly basis. Or the grand total of $296,000 invested into SPYI to receive around $3,000 per month, which again might seem like a ton of money, but if you were to plug in these numbers on a lot of the other more dividend growth style ETFs, it's going to take a lot more, just relatively speaking. Another higher yielding option that an investor could of course use to reach that $3,000 per month income goal from dividends alone and retire early is one of my other favorite higher income ETFs. We're talking about QQQI, or the NEOS Nasdaq 100 High Income ETF. Now, this ETF has a very similar strategy to that of SPYI. The only difference is that it utilizes the Nasdaq, sells cover calls, and does basically the same thing. Now, even though this ETF has not been around all that long, just a few months here, so the safety level, in my opinion, is going to go down a little bit, just because I really like to see a track record and see how something trades over time. But at least so far, QQQI has been paying around 59 cents or so every single month. And this is for an ETF that costs around $48 per share, which means in theory, an investor would only need to purchase around 5,084 shares of QQQI in order to have that $3,000 income goal met. Or in theory, an investor would have to spend around $244,000 into QQQI in order to earn somewhere around $3,000 per month in dividends. Now, I think it's also important to note that in general, when it comes to dividend investing, different assets are going to have a different degree of risk involved. Like for example, if a stock or ETF claims it's going to yield a significant amount, and or if a stock or ETF has a massive growth potential and is higher beta, the potential risk could be higher than that of a slow and steady dividend growth ETF, something like SHD. And that's why for me personally, I like to have a portfolio with a mixed basket of different stocks and ETFs that offer different amount of risks, different amount of yields, and different amount of growth potential. Out of the three higher yielding options that we talked about in this video, JEPQ, SPYI, and QQQI, if you were building out a portfolio for income and wanted to earn a ton of income a lot faster, which of those ETFs would you buy as of now? Drop your favorite ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.